it's been much ado about nothing for the past 2 years. There never was any inflation. Everybody says, "Oh, what are you talking about? Inflation was 8%. No, it wasn't. I mean, inflation is when there's excess demand, limited supply, prices rise.
Right.
What we had was currency devaluation. So post-lockdowns in 2020, they doubled the money supply over 18 months. Think about that. 244 years as a republic, $10 trillion. 2 years, $10 trillion. Crazy. I mean, literally crazy, off the charts, cult of Kelton. And everyone's shocked. I mean, shocked, I tell you, Paul, that their house went up or oil prices went up or used car prices went up. No, none of those things got better. None of them increased in demand. The demand actually went down because we were all locked in our homes and apartments. It was the money got worse. And so now the money supply is contracting. And shockingly, it's the first time it's contracted in over 100 years. U.S. money supply has grown at 7.5% on average every year for about 110 years. We finally just contracted it. And shockingly, prices are, quote unquote, rising less fast. They're actually not falling, right?
Yeah.
They're rising less fast. I love how the president says something like, we've eliminated inflation. No, we got back to a level that's only 50% higher than the stated rate at 3% instead of 2%. But it's all dumb, right? That's a technical term, dumb. It's a stealth wealth tax. It's been going on since 1913. The goal is to steal from the poor and give to the rich. And they're really good at it. In fact, we have the highest and worst wealth and income inequality in the history of the country. And it's because of the creation of the Fed and the ability of a non-government. Remember, the Federal Reserve is not federal, nor does it have any reserves. It's not a bank.
Right.
It is a group of bankers that own a private corporation that controls the price of money. And price controls are bad. They've never been good. Rent controls are bad. Minimum wage is bad. Every price control is bad. The market should decide prices. And they've been controlling the price of money so that they can steal from the people who don't own things and give it to the people at the top of the pyramid who do.
Welcome, money talkers, to the battlefield, and the SEC is stirring up some Bitcoin ETF drama. It's all about cash versus in-kind. Subscribe, smash that like button, and let's unravel the SEC showdown that might change the ETF game. Bitcoin just bounced back to $43,000 after the FOMC meeting, where the U.S. Fed dropped the bomb about 3 rate cuts in 2024. Now let's peek into the Bitcoin options data. 37,000 options ready to expire, a put-call ratio of 1.02, more bears in the house, and a max Bain point at $42,000. That's where the least options value would be lost. It's like a crypto puzzle, and the pieces are saying, brace for impact. Crypto waves are surging. After the FOMC meeting, Bitcoin and Ethereum witnessed a $20 billion flood in just 24 hours. Analysts are saying it's like deja vu from December 2020, when BTC skyrocketed from $18,000 to $65,000. Right now, Bitcoin's doing the limbo dance between $39,575 and $44,800. But the crystal ball says we might see a party between $43,500 and $41,700 soon. Hold on tight, crypto surfers. The waves are getting higher. Listen up. The SEC is giving a nod to a cash create model for Bitcoin ETFs. BlackRock and others pitched an in-kind model, but the SEC wants cash in the game. It's a battle between efficiency and flexibility. Cash creates might mean more taxes, and that's shaking things up in the ETF realm. The drama is real. If the SEC gets its way, ETF issuers might be paying capital gains taxes when converting cash to BTC. That's like throwing a curveball to ETF holders. Grayscale Bitcoin Trust might feel the heat since it's been holding BTC for ages at lower prices. It's like a tax twist in the ETF tail. The SEC showdown is shaking the ETF world, and we're here for the crypto theatrics. Let's continue our discussion with Mark Yusko.
Fiat is the primary tool for the kleptocrats, right? The people at the top, the few, to steal from the rest of us, right? If I can take a currency and I can devalue it in front of your eyes, by printing more of it out of thin air, then I get richer. Now, if you take that away from me, because Bitcoin is a deflationary currency, not an inflationary currency, it actually goes up in value as the currency it's priced in goes down. Because let's remember, one Bitcoin, 21 million in the history of the world, probably less than that because some are lost or stolen. So 21 million, let's call it 18 million units. One Bitcoin will always be one Bitcoin. But it's not priced in Bitcoin. It's priced in dollars or yen or euros. And when we price in those currencies, we find that it is a perfect store of value, similar to gold. And that's the reason that the feds don't like it. The government doesn't like it. Ms. Warren doesn't like it. They are afraid of it. They're absolutely terrified that this perfect money takes away their, they believe, God-given right? It says, in God we trust on the back of the currency. But it's kind of wild and kind of crazy. And if you just stop for a second and think about it, and think about why do we let this small group of people control the price of money, we'd probably rebel. But we don't, because we're comfortable. We have pretty good high quality of life. The water runs, the heat works for most of us. Now, there are a whole bunch of people who are very uncomfortable, don't get me wrong. But on average, the average person has a pretty good life. And so they don't feel the slow, stealth wealth tax that is inflation. Because it's only 2% a year. What's that? Well, it takes half your purchasing power over a 30-year period. That's not good for you. Well, I mean, look, we're talking about opening up about 30 trillion, okay, round numbers, 30 trillion with a T. And, trillion is just a number that just it rolls off the tongue, but no one really understands it.
How big it is.
To really understand it, you and I would have to sit here on air for 31,710 years and spend $1 every second. That's 1 trillion. So 30 of those units are going to be opened up on, I believe, January 8th next year when they crown the king on the king's birthday. That's my little thing. So I think that happens on that Monday. And when that happens, that $30 trillion now at UBS and Merrill Lynch and all these places that prohibit you from, use it. Here's the crazy thing. We live in this permissioned world, and yet we all tolerate it, right? We put our money in the bank. It's now the bank's money, and we can use it if they give us permission. And yes, they give us permission most of the time, but sometimes they don't, right? Imagine waking up in, the island in Europe, back in 2013, 14, where they took in Cyprus, where they took 3/4 of your money, right? Because they had led money to a bunch of Russian oligarchs and it got confiscated. So
Lebanon.
Your money's gone.
Yep.
Or how about La Jolla Savings Bank? You put your money in, thought it was safe, and it's gone. So one of the things about permissioned worlds is they like that control. And what they really like, Paul, is they extract $7 trillion every year globally, from us in the form of account fees, accounting fees, audit fees, transaction fees. If I want to send you money, I have to have a bank account. You have to have a bank account. They charge me a wire fee. If I want to send you a Bitcoin, I punch a couple buttons and it's yours. So that frightens them to death because their monopoly on friction. So governments have a monopoly on violence. Banks have a monopoly on friction. And that's the first time I ever said that. I like that. And that monopoly is about to vanish.
Yeah.
And that terrifies them. And I think once we get the sense that, well, wait a minute, I don't have to live in a permissioned world. I tell a story all the time that, the first time I tried to transfer money from my Bank of America account to Coinbase to buy some assets. And we were early investors in Coinbase. And so I still use them. People say, not your keys, not your coins. I'm like, yeah, I know. But I use Coinbase because I like the business.
Coinbase International is launching spot crypto trading for non-US customers. The launch and expansion of spot trading on Coinbase International Exchange will occur over several phases. Coinbase detailed, "Our primary focus at the outset will be to build liquidity and create a robust foundation. In the coming months, we plan to expand the product to include retail users, additional assets, and features that enable new trading strategies and enhance capital efficiency." If you enjoyed the video, don't forget to give it a thumbs up and subscribe to our channel for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.